Hey everyone, Luke here. Hope you're doing well. And with the crypto market pulling back so much as it is, I wanted to share with you guys my favorite, personally, risk reward um, in the space right now. Okay, and that is Bitcoin Cash. Okay, now there's a number of factors that go into this. Part of it is number one, I would say sentiment. Okay, so I would say the first, you know, is sentiment right now. Okay, so this is not only in regards to the current market, but also towards the coin itself. So, first of all, the market has pulled back extremely. Okay, so if we look at Bitcoin Cash, it's down about, I would say 95% from its high. Okay, so its high during the last bull run was about $1,500, and currently it's about $100. So it's about 95% around there. Okay, around a 95% pullback. Okay, now you're thinking to yourself, why would I buy something that's down so much? Well, that's when you want to buy. Okay, you want to be buying assets when they're down a lot. Okay, what's the famous quote? You want to be buying blood in the streets, even if it's your own. Okay, well, this is the crypto market currently. Okay, so sentiment is in the gutter. Okay, there's so much panic and uncertainty and FUD in crypto right now. So many of the giant hedge funds have been liquidated. There's, one of the biggest stable coins, Luna, has been basically it went to zero. Okay, it turned out it was basically just a scam. So there's worry about all the other stable coins. There's worry about exchanges. The exchanges like Coinbase aren't as making as much money as they used to be, as they used to. And there's just a lot of fear and uncertainty, and people are panicking, and people are getting liquidated left and right, and is crypto ever going to come back? And this is when you want to buy. Okay, when people are scared and fearful, and their emotions rule them, that's when you want to be buying. It's important to realize that markets, they don't run on technicals so much as they run on emotion. Okay, and this is the epitome of this is crypto. Okay, it's very, very emotional, and you get extreme volatility. Okay, so sentiment's in the gutter. Okay, but with Bitcoin Cash, the sentiment is also negative for the coin itself, and it always has been. So I don't want to get too much into the backstory of Bitcoin Cash, but in the general markets, and especially in the Bitcoin community, they've never been a fan of Bitcoin Cash. So if you look at social media posts about Bitcoin Cash, okay, you'll see a lot of negative sentiment saying it's a scam. It's run by one dude, which is absurd. You'll see they'll call it Bitcoin Crash or Bcash, or it's one of the most common coins I see made fun of. Okay, so that goes along with sentiment. Okay, and if you see that sort of sentiment around an asset, okay, the herd is usually wrong, especially over a long enough period of time. And if you do research on an asset and you like it and you think it's undervalued and you see that sort of sentiment around it, that could be a good thing. Okay. So sentiment is in the gutter, not only for crypto itself, but for Bitcoin Cash especially, due to the fact that it was a fork. The Bitcoin maximalists, as they say, do not like it at all. And most people have been taught that Bitcoin Cash is a scam for whatever reason. Okay. So sentiment in the gutter. Okay. So what's another factor? Okay, is utility of the coin. Okay. So Bitcoin is capable, actually, of much more than you've probably been taught. The current Bitcoin code base took a certain path, and they've gone with the narrative of digital gold. Now, this is fine, but Bitcoin can actually do a lot more than people realize. Okay, Bitcoin is not just capable of receiving and sending. Okay, this sort of paying with Bitcoin. So a lot of people think of it as digital gold. Number one, so it goes up in value. It's a store of value narrative. And number two, they know that you can send it and receive it. Okay, but they don't realize that Bitcoin actually can do limited smart contracts. So there's things like time locks, multi-sigs. So that means you can create an address, an amount of with a bit of Bitcoin in it, and it's controlled by like a three out of five, for example. So 5 different people could have a key to this address, and then 3 out of 5 people have to sign a transaction for it to be moved. You can do time lock, where you can lock coins for a certain amount of time. But you can also do much more than that. Okay, you can do things like what Ethereum is capable of. Okay, you can do more of the sort of DeFi sort of things like tokens. You can do all those now on Bitcoin Cash. People don't realize that the code base is always being upgraded, and that when Bitcoin and Bitcoin Cash forked, that Bitcoin Cash has been adding new things to the chain ever since. So for about the last 3 years now, they've been adding more and more capabilities to Bitcoin Cash. And the chain itself now, especially in a year or two from now, will be capable actually of most of the things Ethereum, if not all of the things Ethereum can do. And for certain applications, it'll be a lot more scalable because of its UTXO. Okay, so this is that's a topic for another video, but you can look on it and you go on YouTube and you can research UTXO versus the Ethereum virtual machine, and you can see how they process transactions differently. Okay, but the gist of it is that Ethereum basically can do any sort of code. It's what we call Turing complete. But in order to do that, it sacrifices scalability. Okay, Bitcoin, on the other hand, is not Turing complete, but what it sacrifices for programmability, it can do things in parallel a lot more. Okay, it's a lot more scalable. Okay. Another thing that we have is merchant adoption. Okay. Now, merchant adoption is not nearly as big as one as you think. Okay. But if you look in places like the Caribbean and stuff like that, they are using it and it's accepted in stores. Okay. But it's not as bullish for price as you would think, right? Because what do most merchants do when they receive Bitcoin Cash? They're probably going to sell that for dollars or their local currency. Okay. But it still helps. Okay. Especially in the long run, when other things are enabled on chain that will enable it to do certain things. Okay. So let's actually talk about. Let's go and find something that. Let's go AnyHedge. I'm gonna find you guys one of the reasons why I am so bullish on Bitcoin Cash. Okay, so this is an example that I want to give you guys that Bitcoin Cash can do. Okay, get out of the way here. So some of the developers are working on something called AnyHedge. Okay, now what do people want out of crypto? Okay, so let's ask that question. What do people want? What does the market want out of crypto? Okay, well, as we saw with Luna, what the market wants is it wants yield on stable tokens. Okay, so a lot of people in the Bitcoin Cash community don't like this because they want people to be using Bitcoin Cash as money. But Bitcoin Cash does not make very good money, and the vast majority of the population does not see it as money, and probably will never well see it as money. Okay. What do people see as money? What do people want to hold? People want U.S. dollars. Okay. Now this could play out where it's not the case, but we'll talk about that and why it doesn't really matter in regards to AnyHedge. But people want dollars. Okay, so they want to hold their value in dollars, even though we're experiencing a lot of inflation. Most assets are priced in dollars. Okay, so oil, most of the commodities markets, basically all the commodities markets, and most things in general are priced in dollars, and that includes debt. Okay, so what that means is that people take loans in dollars, they're denominated in dollars, and then to pay back the loans or to pay interest on the loans, they need dollars to make service payments on the debt. Okay. And what we see in third world countries too is, they want dollars because their local currencies are hyperinflating much faster than ours is, and relatively, U.S. dollars are very stable to them. Okay, in places like Venezuela, for example, okay, or even Argentina, or these other countries, like in people like places in Africa. Okay, so they want these. So the world kind of recognizes dollars a lot more. Okay, then what else do people want? They want yield. What does that mean? They want to earn interest on their money. Okay, and so we saw that with Luna. People could earn 20% interest. Now it turns out it was basically a Ponzi scheme, right? But the point is that the demand was there. Luna became almost a top 5 coin, just because there's so much demand for yield on stable tokens. Okay, now 20% is obviously probably not doable, and that's why Luna blew up. But 5%, that could be doable, I think, with the right system. Once you get like 10% yield on your stable tokens, you're probably looking at more like a Ponzi scheme. But I mean, you can earn 10% on your money through real estate. I mean, 5% is more sustainable, but you can go invest money. You can take out a loan right now and go buy an apartment complex and earn 5% on it, just from rental income. And so 5% is generally more sustainable, I would say, on US dollar tokens. But that's what the market wants, okay? We've seen massive growth in USDC, USDT, Luna. Stable tokens are all the rage, okay? It's because people want them, okay? People, and especially if you're in a third world country, even if you accept Bitcoin Cash, and you're aware of it, you don't want to hold your value or do payroll or live off of, to a certain extent, Bitcoin Cash, right? It's too volatile. It goes up and down too much, okay? Bitcoin Cash could go up or down 20% tomorrow. Or, 5-10% is just a daily move for something like Bitcoin Cash, okay? And it can do 50% moves in a day, easy, okay? So it's too volatile for people to, especially in third world countries that need it for payments. It's probably too volatile, right? Whereas, if you have some money to spare, you can accumulate these assets like Bitcoin Cash in order to maybe sell them at a later date when they're worth more money. But people, for the most part, they want stable tokens, and they want to earn interest on those stable tokens, okay? So that's where AnyHedge comes in, okay? So what AnyHedge can do is basically create a token, okay? And we can read about it here. So you can read the white paper, okay? And what it basically does is it connects to an oracle, and from the oracle you get a price feed, right? And then with that price feed you can create a token, okay? That it's just, token might be not the right word, but it's essentially a token that derives its value. It's connected to the oracle. So let's say you made a gold token, right? It connects to the oracle, and then what it does through some DeFi magic, okay? Basically how it works is you have a short, okay, a 1x short on that market, on gold, for example, and then you have like a 1x long, and then the market can buy and sell longs and shorts in a decentralized marketplace that's backing that asset. And it's backed by Bitcoin Cash. So basically what it means, okay, I don't want to get too technical, and even me myself, I honestly don't completely understand the mechanism, how it works. But the gist of it is that you can create any sort of token, okay, like gold, silver, US dollar, and it's dynamically backed by Bitcoin Cash. Okay, so that means that you can hold your account's value in dollars. So let's say you get some Bitcoin, you sell something for $100 worth of Bitcoin Cash. Okay, so you have the Bitcoin Cash, $100 worth of Bitcoin Cash in your wallet. You can use a smart contract on chain, on the Bitcoin Cash chain, to lock that in. Okay, and then your account will become denominated in dollars. Okay, and it will hold that value. Okay, and you can do that with silver, gold, oil, anything with basically an oracle to a futures market. Okay. So you could even do like a basket of things if you in the future, okay? And it's dynamically backed by Bitcoin Cash. That's important for two reasons. Okay, number one is you want to back it by something. Okay, so why did Luna fail? They were basically making dollar tokens out of thin air. Okay, so historically we've backed dollars by gold. Okay, nowadays most currencies are backed by nothing, and because they're backed by nothing, they get printed into oblivion. Okay, so we want to back the dollar token or whatever token it is. We want to actually back it by something. If it's a gold token, you want it backed by gold or whatever. Now, what is bullish for the coin? The bullish for the coin is if there's a demand for the coin, right? So how the system works, right, is because the token, if you want to call it that, is being backed dynamically by Bitcoin Cash. So if there's $1,000 worth of demand, or let's say that it grows, right, and there's like the AnyHedge US dollar token. Let's say there's $1 billion market cap for the US dollar token. Okay, well, you need that much Bitcoin Cash, or I might not be right. It might be 50% of that because some of it is shorts. But let's just say for the thought experiment, it's 100% backing. Okay. So you need $1 billion worth of Bitcoin Cash to be backing that amount of the US dollar token, and the smart contract will be doing that dynamically. So as the price of Bitcoin Cash changes, you'll need more or less of the Bitcoin Cash. Okay, does that make sense? Okay, so if Bitcoin Cash doubles, you'll only need $500 million worth of Bitcoin Cash at the new price level. Okay, it'll be constantly changing because the Oracle will be feeding it price information. Okay, so what that creates is a lot of bullish price pressure due to the utility. Okay, so you can see if the market cap of these coins grows, and you have like gold tokens and silver tokens, US dollar tokens, and they're all being backed by Bitcoin Cash. As people trade and they hold these coins, then the price of Bitcoin Cash, the demand for Bitcoin Cash should go up. Okay. It's really the best of both worlds. And if you read the some of the old Satoshi emails, not the emails, but him on the Bitcoin Talk forum, he would actually talk about this, how the holy grail of crypto is basically dynamic collateral for a stable value. Okay, so that means something like Bitcoin. It means something like the US dollar, right, that holds its value, but it's dynamically backed by something in the background. But it's stable value with dynamic collateral. Okay, that's like the holy grail of money. Okay, so you can imagine all these different asset tokens being dynamically backed by Bitcoin Cash in the background. Now, of course, other people will mimic this, and there's probably other people working on similar things. So it's not to say that this will, just immediately bring, it's like just something that Bitcoin Cash can do. And you can build a system like this on obviously other blockchains. And so Bitcoin Cash could lose its first mover advantage, but it's the first sort of thing that I've seen like that. Okay, and Bitcoin Cash is very suited for this sort of application because it's so scalable. Okay, so and then lastly, the reason why I think the risk reward on Bitcoin Cash is so skewed is because the Bitcoin ratio is wrecked. Okay, so let's look at that on the chart. So we can see that, let's go to the weekly chart. Now, this is the price of Bitcoin Cash to Bitcoin. We can see our downtrend line here. And we can see we're starting to actually grind this downtrend now. And this downtrend is very steep. So what this chart is saying is that anytime basically in this price, in this coin's history, you're better off holding Bitcoin, okay? People were selling their Bitcoin for Bitcoin Cash up here, right? And now look how far down this chart has gone, okay? So right now you can actually get 200 Bitcoin Cash for 1 Bitcoin, okay? Whereas in the past you could only do that for like 10 coins. So let's zoom into the daily, okay? Now, do we think that do we know that this chart will ever reverse? No, we don't. You could keep getting wrecked on this chart, okay? And we could be wrong about Bitcoin Cash. But what you have to realize is like what we talked about. It's risk versus reward, okay? Bitcoin Cash's lowest price ever, let's go to the monthly. is about $80. Okay, so we're getting close to there. So what's the risk with buying some Bitcoin Cash at this level? Okay, what's the risk? Probably not a lot. It's not, these coins don't go to zero. So what happens is coins just underperform, and then they pump less and less every cycle until eventually they have zero volume and zero interest, and they just slowly die that way. Crypto doesn't go to zero. People don't realize that. And they talk about Bitcoin going to zero. Bitcoin's never going to go to zero. Okay, even if people completely reject Bitcoin, it'll become a collectible, and it'll always have some value. Okay. But what happens is that volume and liquidity dries up, and interest and movement and the community dies. Okay, that's what'll happen. So what's the worst case of Bitcoin Cash? I would say the worst case, it probably goes down to its all-time low, like $75. Okay, what's the upside? Well, the upside is that I think it could one day flip Bitcoin. Okay, now that doesn't look like it's the case at this point, right? But this is when we want to be buying. Okay, when a coin like this is so far down versus Bitcoin. Okay, no one would think that Bitcoin Cash would flip Bitcoin at this point. Most people would think that that concept itself is absurd. Okay, but it's the same number of coins. Okay, I would say the greatest risk with Bitcoin Cash is that you buy it at these price levels, around $100, and it underperforms. Like we talked about, it could easily happen. And it'll of course underperform some coins. I mean, just the way it is, right? Of course there'll be coins that outperform it. So the worst case, it underperforms, and it probably pumps to like $300-$400 next bull cycle, and then you still got, and that's probably like 2 years from now. So I would say worst case is probably $300-$400 from now. Okay, 2 years from now, I should say. It's about $300-$400, maybe $500, and it's underperformed. It doesn't break its all-time high. And even then, you'll have the opportunity to sell at like a 4 or 5x, okay? So you have to realize that that's what happens with crypto when these coins are so far down. I bought Populous, a lower cap coin, that ended up basically being a complete scam, in my opinion. I'm not completely sure. But I still got like a 10x out of it because I bought it. It was down like 99%, okay? And it was just so the market gets so skewed in one way that assets become valuable again. And as you know, I like gold and silver stuff, and other assets. Real estate is good, things like that. But yeah. So at a certain, now, should you put your life savings into Bitcoin Cash? No. Well, maybe it depends how aggressive you are and how much how much your life savings is worth. But I mean, under $100 right now, that's an excellent place to start averaging in, okay? And you don't have to buy a lot. Don't buy more than you can afford to lose. But even something like $100 and a coin like this, and this is a very pro Bitcoin Cash, video. But there could be other coins you like. I hold other coins. You guys know I like Theta and Persistence, and I like Thorchain still, or maybe even Hex to get into the Pulse Chain launch. But Bitcoin Cash is nice because for the common investor, it's on Coinbase and everything. It's on all the major exchanges. It has plenty of liquidity. It's got a good brand name. It's got Bitcoin in the name, so people understand it pretty well. And yeah, $100 in a coin like this, 5 years from now, it could do 100x easily. So your $100 could turn into $10,000, maybe more. Now, obviously, we can't say for certain that's going to happen, but you have to think of the risk reward, right? What is the risk? The risk is that it's already so far down, it probably can't go that much more down. Okay, I would say maybe like $75. I guess worst case, it could go even lower, right? But even then, if you start averaging down here, you don't have to worry about it too much. So let's say you're going to invest $1,000. You just start buying now, and then you invest. You dollar cost average that $1,000 every week or every day. Maybe week may be easier because you don't want to buy every day. Or you can set it to auto, and then you just do that over the course of the next month or two. And if we go lower, you're buying more, and if we go higher, you're buying less. But you just start averaging in, okay. And yeah, I think it's a pretty low risk, high reward play. And the sentiment for the coin is very low. The price action is very low. And it's like, at a certain point, it just becomes like, what's the worst that could happen? The coin's already down 95%. Okay, what's going to happen? It's going to go to zero? No, it's not going to go to zero. And, these coins, for the most part, at some point, they pop back up. Okay? Now, you could be doing that for multiple coins like we talked about, but again, I like the risk reward of Bitcoin Cash a lot. Okay? I think people sort of underestimate how much adoption it can get in the places like the Caribbean where they're looking to pass legal tender laws. I think people underestimate how scalable it is. Okay, Bitcoin Cash today can handle PayPal levels basically. Okay, it's getting Bitcoin Cash already on chain is very close to Visa levels if need be, and people underestimate the sort of smart contracts it can do. Okay, they underestimate what the coin is, what it's capable of. Okay, and I think that I like it's had problems lately, but is a project on Bitcoin Cash called Smart Bitcoin Cash. This is actually a side chain, which you might not know what that is, but it runs all the Ethereum code, and it's much more scalable than Ethereum. It's about 80 times more scalable than Ethereum currently. And there's a couple cool projects on there, like Law Token is cool, and Mist, and there's a couple others, like there's a Joystick, which is like a gaming thing. And most of the applications now in crypto are run using Solidity, which is the Ethereum, the code that Ethereum runs. And it actually uses locked Bitcoin Cash as its gas, which is bullish for the price. Okay. But Smart Bitcoin Cash is another project that I like. There's a lot of cool projects happening on Bitcoin Cash, and it's still a pretty active, strong community that's looking to build stuff. Okay. Now, again, I know it's scary, right? Buying an asset when it's down like this, looking at this chart is scary. But you start averaging in. You don't buy more than you can afford to lose, and you take care of your security. You put it on a hardware wallet, and you don't try to overtrade it or anything. And then I think that if you buy Bitcoin Cash at these levels, even if it underperforms a couple years from now, you'll be very happy. Okay? And I think I have a pretty good track record when it comes to these things. Okay? I was telling people to buy Bitcoin at $300. Okay? Ethereum I liked, and I was buying Ethereum at like $10, $8. I don't remember exactly. Theta, I liked at like 10 cents, and it went to $16. That was a really good one for us. And there's other ones as well, and so I think Bitcoin Cash has a chance at being a second chance for people that missed out on Bitcoin. Okay, I think it can do its price action. It could do what Bitcoin did. Okay, which means that I think someday it could go 20, 30, 40, 50. $100,000 even someday. That probably won't be for some years in the future, but once these coins start to get mass adoption, everyone realizes how powerful they are and how they can really take the power into their own hands with money. There's no reason why we can't get very nice very nice price action, very nice reward for the risk that we took to buy the coin when it was this low. Okay. Now I don't want to ramble too much, so I'm probably going to cut the video short, but that's it. Think about it. And yeah, maybe buy some Bitcoin Cash. Okay. All right. I'll talk to you guys later. Bye.